Ever wonder what makes a stock just suddenly explode? Today, we're diving into the wild story of a company called Genprex, ticker GNPX. It became the center of a financial hurricane, like overnight. We're going to play detective here, using a technical report to piece together how this happened and what it tells us about the anatomy of a stock bubble. Let's get right into it. 232%. Let that sink in for a second. That's how much GNPX shot up in a single day. A move like that is never random, It's a massive signal that something is going on. But was it real? To figure that out, we need our first clue, and it's a big one. It wasn't just the price that went insane. So, on a normal day, maybe 10 million shares of this stock trade hands. But on this day, we're talking over 756 million. That is a 75 times increase in trading activity. This wasn't just a couple of big players. This was an absolute speculative frenzy. And frenzies, well, they tend to burn out pretty fast. Let's see what the data says. Okay, so this is where we get into the nitty-gritty. We're going to follow the clues hidden in the data, piece by piece, and try to understand what was really happening under the surface of that mind-boggling price surge.
Here's our first major clue. The closing price was almost double its own average price from just the last 5 days. Think of it like a rubber band. The average price is where it wants to be, and the current price is stretching it out. The further you stretch it, the more tension builds, and the more likely it is to snap back, hard.
Now, to measure that tension, analysts use all sorts of tools. One of the classics is the RSI, or the Relative Strength Index. All you really need to know is that it's basically a speedometer for stock buying. It tells us if the buying got way too fast, way too furious, and might be about to flame out.
So with the RSI, any score over 70 is considered the overbought warning zone. It's the market telling you to pump the brakes. Well, GMPX didn't just tap the brakes, it blew right past the warning zone, hitting a staggering 88.04. That's not a warning light, that's a 5-alarm fire in the data.
So the takeaway here couldn't be clearer. The buying pressure was just completely unsustainable. It was a flashing sign that the buyers were just exhausted. But believe it or not, this wasn't even the only warning sign. The evidence of a weakening rally was actually showing up on its best day.
In every big drama, there's a turning point, a moment where the cracks start to show. And in the data for GNPX, those cracks were already appearing on the very day of its biggest victory. Let's look at the evidence that this whole rally was already in trouble. Now think about this for a second. Even though the stock closed up over 200%, it actually fell 24% from its highest point that same day. That means a huge wave of sellers came rushing in at the peak to cash out. It's a classic sign that the smart money was heading for the exits while everyone else was just piling in.
And digging in a little deeper, we find even more trouble brewing. While the price was hitting these incredible new highs, other important momentum indicators, things like stochastics and the MACD, were already getting weaker. It's like a car's engine starting to sputter even as it's hitting its top speed. It's a subtle but super critical warning that the power is fading.
And now, for maybe the most powerful clue of them all. A tool called linear regression, which is just a fancy way of drawing a statistical trend line, shows the price was trading over 261%, above where it statistically should have been.
What that means is the price wasn't just high, it was completely detached from reality. It was floating in uncharted territory, totally disconnected from its own trend. And a stock this far from home is incredibly vulnerable to something called mean reversion, which is just a violent snapback toward the average.
Okay, so we've gathered all the clues and we've examined the evidence. Now, what does it all mean for what happens next? Well, based on all this data, the technical report actually mapped out a few possible paths forward for GNPX and even assigned probabilities to them.
So, what's the most likely forecast? Well, the analysts give it a 60% chance of a correction, meaning a price drop. There's a 30% chance of consolidation, where it just kind of trades sideways for a while, and only a tiny 10% chance that this insane uptrend actually continues. The odds are clearly stacked against another big surge.
So here's the playbook. A break below 75 cents is the key signal that the correction is probably underway. If it manages to hang out between 75 and 90 cents, that's consolidation. And hey, notice that little 5% chance of a collapse, a total catastrophic failure, if that key support level at 55 cents breaks. These are the specific price levels that tell us which story is playing out.
So after looking at all this data, the explosive volume, the overbought indicators, all the warning signs, what's the final verdict from the technical report?
What should we take away from this absolutely incredible story?
It all really comes down to a classic tug of war. On one side, you have the undeniable power of that trend, the sheer momentum that sent this stock to the moon. But on the other side, you have a mountain of evidence, all the overbought conditions and reversal signs pulling it right back down to earth. And at this point, the bearish signs definitely seem to have the stronger grip.
And here it is, the report's final verdict, and they don't mince words. The current price offers unfavorable risk-reward for new long positions. Investors should exercise extreme caution. In other words, the risk of buying in at these levels is just way bigger than any potential reward. This has stopped being an investment and has become a high-stakes gamble.
And that leaves us with the final critical question, right? Was this incredible 232% surge the start of a real, fundamental change for the company? Or was it just a temporary, speculative bubble, blown up by hype and destined to pop? All the technical data we just looked at points pretty strongly to the latter, leaving us with a serious cautionary tale for anyone out there chasing those rocket ship gains.